Is refinancing student loans a good idea? If you've ever had student loans, you've probably had this question, and in this video, we're going to cover how to answer it. Hey guys, Jessica here. So before jumping into it, really quick call out that we're Uprise. We're a fintech company that helps people put together personalized Wall Street level financial plans completely free. And so this is a lot of what we do. We take a look at people's specific situations, student loans, budgeting, employer benefits, and figure out exactly how to optimize your specific situation. And so to get your plan, definitely check us out. I've linked to us in the description below. So getting back to it, the way I'm going to structure this video is I'm going to cover 5 different questions, and I'll link in the description below the timestamps for each of these questions in case you want to jump around or you just want to dive into a specific question. But the questions are, 1, what is refinancing? Like what counts as refinancing? The second thing is, what are those no-brainer cases where it just absolutely makes sense through refinance to get a quote? The third one is, okay, so if that's not you, if you're not a no-brainer case, then what are the other situations where it might make sense to refinance? The fourth one is how to set yourself up to make sure you get a good rate when you go out and think about refinancing. And the last one is, okay, practically speaking, how do you actually do it? How do you actually refinance a loan? Okay, so jumping into it, what does it mean to refinance? Refinancing basically means that you're exchanging an old loan for a new loan. And hopefully that new loan has better terms, better interest rate, or whatever it is that you're looking for. Usually it's the interest rate. So over the course of your life, refinancing a loan to a lower interest rate, especially if it's a much lower interest rate, could potentially save you thousands of dollars, tens of thousands of dollars. And obviously that's an amazing idea, right? Because now you have more money to be able to spend on other priorities that you have, which are not paying off student loans. But the other thing it does is if you get a lower interest rate loan and you're able to pay it off faster, you're basically able to lower your debt burden. So your debt to income ratio, by lowering the total amount of debt that you have in your name, that really helps free up your credit for other things. So for example, if you decide you want to buy a house and you need a giant loan like a mortgage, they definitely look at things like the debt to income ratio to figure out what kind of rate to give you and to even whether or not to give you that mortgage. So the no-brainer case is this. If you have a private student loan, then definitely go out there and check what kind of interest rates you can get. If you can get an interest rate to finance your loan for a little bit cheaper or even a lot cheaper, then definitely I would take a look at that, consider that. And I definitely recommend also doing this sooner rather than later because in all likelihood, interest rates are going up in the near to medium term. And so the sooner you lock in that rate, the better. Okay, so what about federal? So as I mentioned, if you have a private loan, that's a no-brainer case. But if you have federal is a lot trickier. And the reason is because federal student loans come with a lot of protections that if you were to refinance into a private loan, because only private lenders do the refinancings. So if you were to refinance and it becomes a private loan, then you lose all those protections. So these protections could include things like, number 1, as you probably know, right now, all federal student loan interest rates and payments are suspended until May 1st, 2022, and they have been for pretty much all of COVID. If you were to refinance, there's a high likelihood that you'll need to start paying the student loan now, whereas with a federal loan, you could wait until May. The second thing, and probably the bigger thing, is the fact that federal loans have a lot of repayment plan options, and a lot of these are tied to your income. And so, for example, if you decide, hey, I want to go work at a nonprofit for a couple of years and take a lower salary, you can set up a federal loan repayment plan so that it's tied to your income, and while your income is low, then your repayment is also lower for those years. There are even very specific cases where you could get federal loan forgiveness, but those are pretty few and far between. But in general, federal loans have things like this, whereas private loans don't. And lastly, the Biden administration and Democrats in Congress have been talking about student loan forgiveness for some time. Like I've heard, hey, let's forgive $10,000 or let's forgive $50,000. No idea whatsoever if this is going to come to pass. But if you were to refinance your student loans to private loans, and then in the future, Congress does all of a sudden decide, hey, we want to forgive some student loans, then you wouldn't be eligible anymore. So that's why it's tricky. That's why it's not just about, hey, where can I get the lower interest rate? I wouldn't put too much stock in that last point about Congress and stuff like that, because who knows about Congress. But if there is a chance that, in the future, you might want to take a lower paying job, that kind of stuff, then I would maybe think more about holding on to the federal loans so that you have that flexibility in the future, whatever you decide. If, on the other hand, your income is secure, you kind of know which direction it's going, and you just want to get rid of that loan as quickly as possible, then definitely look into refinancing. There's no downside in getting a quote. And ultimately speaking, the answer to this question is, it depends on your specific situation. You know your situation the best, and so you're probably the best person to be able to make that call. Okay, so getting a good rate. Banks generally look at your overall financial situation. And so like everything, try to set yourself up to be able to make payments on time, that you have a system going to be able to pay your loans. Also, try to work on your credit score. Generally targeting a credit score in the mid to high 600s or even higher would set you up the best to get the best rate. And also, as I mentioned before, that debt to income ratio. So like your total amount of debt that you have divided by the amount of salary you have, try to keep that as low as possible, ideally below 50% or even better, below 20% to be able to get the best rate. Okay, so how do you refinance? I definitely recommend comparing rates at a bunch of different companies. I will link in the description below to a few student loan refinancing companies, and try to get these quotes within a short time frame, say 2 to 3 weeks. Because if you do that, then all of the quotes, it won't impact your credit score as much. It'll all count as one paying on your credit. If you get similar offers, definitely look at a few things. So what are the types of repayment plan options? Are there forbearance options? Do they give you a bonus for signing up with them? Me personally, I always look at their tech to make sure that it's easy to use, it's intuitive. Like the last thing I would want is I couldn't figure out their system and now the payment's stuck somewhere. Anyway, that's all I had for today. If you have any other questions about refinancing student loans, definitely let us know in the comments below. And wanted to mention again, we're Uprise. We're a fintech company that puts together personalized Wall Street level financial plans completely and 100% for free. And we can help you take a look at student loans, budgeting, employer benefits, whatever it is. We'd be happy to help. And on average, we put $100K in net worth back into people's pockets. Other than that, if you'd like to see more videos like this one, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. We'll see you guys next time.